take on the market, but let's try and understand what exactly is happening with MapMyIndia. What we understand is that the promoter has floated a new venture which is going to focus on the B2C business. Of course, there are many nitty-gritties to this. So let's try and understand that and a lot more. Rakesh Verma, the co-founder and chairman and MD of the company, join in. We also have Rohan Verma, the CEO and executive director at MapMyIndia, on the show with us. Gentlemen, both of you, thanks so much for taking the time out and joining in. Rakesh, why is the consumer business not a part of the listed MapMyIndia entity? And if you're so bullish on it, then why only a 10% stake?
First, let me correct. Promoters are not floating a new company. Rohan Verma is floating a company.
Okay. So I should direct the question to Rohan Verma. Rohan, you go then.
Okay. Number two is, if we are so bullish on the consumer business, then why should we have tried to do what you're asking? We may be bullish, we may be feeling good about it, but MapMyIndia has been experimenting for the last 9 months about the opportunities of the consumer business. It became loud and clear that the impact of the consumer business for years to come, maybe 1 year, maybe 4 years, I don't know, the impact of it on our profitability and margin would be so drastically hit that, and further, in any case, MapMyIndia's business has never been a B2C business or a consumer business. It's an initiative that Rohan feels very good about it. He's committed to it. So we accepted his request that, okay, do it outside the company. You can ask more from Rohan.
Rohan, what would be the relationship of MapMyIndia and your new venture? I mean, nobody stops anybody from starting a new venture. Where markets are perhaps trying to seek some understanding is that, will the funding of this new venture be done by the existing equity structure of MapMyIndia?
Sure. Thanks, Nikunj, for having me. So MapMyIndia will get a 10% equity stake in this company. The board had approved a CCD of 35 crores to invest into this new company. But since we've been hearing feedback, inputs, concerns around that, to allay the concerns of minority investors, I've said that I'll not be taking the CCD of 35 crores from MapMyIndia. I'll put in my own funds to run this consumer business. And also, just to kind of say how this will help, is basically MapMyIndia is a successful, growing, profitable B2B and B2B2C company. Now, this consumer business will help showcase the MapMyIndia's maps and technologies through the consumer app. So the CCD relationship, I'm not going to be taking forward to allay the concern of minority investors and be doing this outside.
Rohan, let's look at the other side. You understand this business. You've incubated a very successful business. And I've seen promoters sometimes when they take decisions, they get bullied by the market in the short term. But in the long term, I've realized those decisions, they pay off. And I'm just bringing some points here for benefit of our viewers. When Zomato acquired Blinkist, everybody booed it. And that has turned out to be the cash engine, at least for Zomato. So if you're so confident that you understand this business, then why not go ahead with it? I mean, you have the right to do it, and all companies would like to diversify. And if this business venture does well, then I'm sure eventually the minority shareholders of MapMyIndia will also be happy and they'll say thank you. Why are you taking it back?
I can say a little bit, and then Mr. Verma can add, overall from MapMyIndia's perspective. I'll say that the feedback that we've been getting last few earnings calls and from investors is that, look, MapMyIndia has always is well known as, came to the public markets also as a B2B company, which is profitable. Why add this additional investment in this area of consumer when in any case we're investing on the B2B side in IoT and drones? We've set up a joint venture in Southeast Asia. So I think there's a lot happening in the company, and all for the good. They're pretty large addressable markets that the company has, where the company is focused and is already profitable in. So for all those reasons, sometimes you just can't do too many things at the same time. And that's at least this is my perspective. Mr. Verma can add his own perspective.
Uh, Mr. Verma, so this is the fact that there will be no investment which would be done in terms of diversification or incubating new businesses. Can I say that MapMyIndia will remain the original MapMyIndia, and in future also no new ventures will be incubated?
Incubation we have been doing historically. And as part of that incubation, if you look at any IIT Kanpur or other IITs, they do incubate. And after incubating, they hand it over to the people who would like to run it. In this case, Rohan has a great desire to get into the consumer business. But now what the market is talking about, and the thing I'm talking about related to Zomato also, is not a very good example, Nipun, because MapMyIndia has been historically a profitable company. Zomato has not been a profitable company. And for MapMyIndia to go from a profitable to loss-making company, in my wisdom and in the wisdom of the board, we felt that no investors would like to see that kind of a situation.
Rohan, so just wanted to understand a little bit about the business. People are also wondering why the new entity is using the CE Infosystems brand Mapples. I mean, is there a royalty link here?
See, the way Mapples, we've built it up from a consumer point of view in the last couple of years only. And this is attempting to take on the big giant, Mr. Google Maps, on the consumer side, plus a bunch of more things which will help consumers in India benefit. So the way the business arrangement is that Mapple's brand will be used for this consumer by the company. And also the MapMyIndia will get the benefit of the anonymized data that will come from the app that will help freshen up MapMyIndia's maps or update it, enhance it. And we know that, fundamentally, what is the business benefit to MapMyIndia? The more people that use this Mapples app, the more they'll see that, look, the best maps and technology are powering this app that could also power other good consumer apps or other good enterprise solutions, all go built into cars. And the second part being, the more people that use this app, the data from that is anonymized can be used to enhance points of interest, road information, traffic information, places information, so that MapIndia's maps become better. Plus, there is a 10% equity stake that MapIndia is getting already at the get-go in this company. I think that's a pretty fair benefit that is accruing to MapIndia for not, kind of taking on the P&L hit, let's say, for the foreseeable future or investing in such kind of business.
So I'll wrap it up with one final question, Mr. Verma. The stock is down 8%. And you've allied the concerns. So that means all the concerns which were there about unnecessary diversification, which markets and shareholders they tend to think, at least you are firmly giving this commitment in terms of where the future of MapMyIndia is headed in terms of the original business. So can I say that that's a message which needs to go to your shareholders?
Absolutely. Not only that, MapMyIndia's it's not original business is going. Original business had couple of basic facts. One, the 1,000 crore revenue that we are targeting for FY28 stands. Consumer business was never considered as part of that 1,000 crore. The profitability margin historically we have been getting at 40%, and that's what was getting adversely affected in the last quarters. So the message, and MapMyIndia is not putting in any, will not put at the request of Rohan Verma, which board had approved, about the CCD money of 35 crores. That should allay the fears of the minority shareholders that what is this? MapMyIndia is putting in money into a company and just getting a 10% stake.
All right, gentlemen, Vermaji and Vermaji, that's what I can say. Thank you very much. Thank you for joining us on ET Now.
Thanks, Nikunj.
Thank you.
Thanks.
PNB, 2.5% higher, 107 rupees for PNB. It's turning out to be a good day for banks. And if you really cut across the breadth in terms of the weft and the space of the, weave and the weft of the market, I think the breadth has been the talking point. Adani group of stocks, you got Adani Ports, which is trending up smartly. But for me, the real big one is NTPC Green. I just popped up on my screen, 10% locked up. That's Adani Ports for you. But before we take a break, you want to see Adani Green. No stunning debut, very lukewarm debut. But a new buyer has come back, and the new buyer is just saying hello, because 10% up for NTPC Green, I think that's a giant leap, so to speak, by any stretch of imagination for a company which just went public 7-8 days ago and never got a great result.
If you like this video, then like, share and subscribe to ET Now.